ein australisches Goldprojekt, gleichzeitig aber auch mit einem großen Vanadium Deposit. Das ist heute hier bei mir zu Gast John Price von Intermin Resources und ich werde jetzt ein kleines Interview mit ihm machen. Ich bin hier auf der Diggers and Dealers Konferenz in Kalgoorlie, Australien. Jahr 2018. In Deutschland ist es Sommer, hier bin ich leider in den Winter gegangen. Trotzdem haben wir eine sehr, sehr gute Zeit hier und ich werde auch mit John noch sein Projekt besichtigen am Donnerstag und ja, werde dann auch noch ein separates Video machen, das werde ich auch unten verlinken. Und wird es so John, very nice to see you here, and thank you for taking the opportunity to give an interview to me and the audience.
You're welcome. Glad to be here.
Yeah, maybe you would be so kind to give a short wrap up. What is Intamin Resources about?
Yeah, principally it's a gold exploration company, fairly unique in the fact that we are fully self-funded through monetising small mines and turning them into cash, and then using that money to grow the business organically. We also have a number of joint ventures, as you mentioned, vanadium, copper, nickel, platinum group elements, but they're at no cost to us, no distraction to us, and give shareholders leverage to the upside.
Okay, so you focus on the gold business right now?
Yeah, we are gold people, we're developers, we have mining engineers, geologists and metallurgists that have most of their career in Kalgoorlie, most of our career in gold, and that's what we believe we do best. So we don't pretend we know everything about everything, we stick to what we know, which is gold development, exploration and production.
So and you're from the region, so Kalgoorlie region is very, very famous gold region in Australia, so it's the famous gold fields district here.
It is, it's right, world famous, and certainly world class, 150 million ounces of production, and we certainly believe there's another 150 million ounces to be found yet. It'll be deeper, there'll be more underground, but on a world scale, Kalgoorlie Goldfields is one of the best.
And of those 150 million ounces, how much do you have?
Currently our resource is about 400,000, so we're aiming to hit the magic million ounce mark by Christmas time, and then convert that into at least 500,000 in reserve. But at the same time, we're drilling 55,000 metres of drilling. If we were to hit a new discovery, then it's a real game changer for our company. And to be on these major geological structures where we know there is gold, we think there's a good chance.
So you're going to be a producer very soon. So you talked about small scale production rather than being a pure explorer and raising money again and again and again.
Yeah.
Maybe you could elaborate a little bit about this business model you have.
I think it's a unique factor and probably one that differentiates us from a lot of our peers. Every 6 months, explorers have to raise money at the market, normally at a discount to their share price. We don't have to do that. The money is coming from mining. We started our first mine in November 2016, recently completed our first mine. It put $10 million Australian into the bank and it allowed us to self-fund our own growth. So our drilling program, 55,000 metres with a $4 million budget, and we have another mine ready to go next year to do exactly the same thing. So we can continually monetise small projects, turn them into cash as we grow the business. Once we get up to that mid-tier status, we want to be 100,000 plus ounces per annum, but we want to walk before we run, and we want to not dilute shareholders along the way, because that is the cyclic curse of a lot of explorers that have to raise money every 6 months.
This is something I really, really appreciate. So for full disclosure, I'm a shareholder in Intermin Resources, and maybe if you as the audience, if you are interested in investing in Intermin Resources, I think this is a good play because it's not a pure explorer, and I really appreciate the strategy that you have a clear strategy of being non-dilutive to existing shareholders, or not so much dilutive, and adding more value than you dilute, and as you said, walk or crawl and then walk and then run.
Correct.
And this is it's a more sustainable business model, even in the gold market that has a lot of uncertainty right now.
Yeah, that's a very good point. And I think explorers, because they have to raise money every 6 months, they have to get a lot of good results out, they're in a rush. We are very systematic and we are very conservative, and we won't go ahead of ourselves because we don't need money and we don't have to be thinking about share price every day. We can focus on the technical aspects of getting the mine right till to the team's credit, delivered more tonnes at the same grade for a higher recovery. It over-delivered on the promises that we made to the market, and it generated $10 million in cash. So I think Grant and the team did a fantastic job, and we're applying the same conservatism and systematic approach to our next mine at Goldaktie, which will deliver $6 to $7 million in cash next year when we start it. So we're not in that cycle. We've broken away from that cycle, and we put shareholders first.
And you told me yesterday that you kind of over-drilled your project, being cautious,
Yes.
being very, very certain. Okay, the ounces that we are looking for, the grades are really in the ground, and there are no surprises.
There is. It is a risky business, mining and exploring, but we have to mitigate that risk as best we can, and we do that by what some would call over-drilling. We don't use capital because we use infrastructure that's already in Kalgoorlie to mill and process the ore. Yes, they get a margin, but it's offset by the capital we would have needed to build our own mill. So we'll do that until we grow to a sufficient size and have a critical mass, and that's that 1 million ounces I was talking about in resource, 500,000 ounces in reserve. Then if I've got a 5-year plan that with visibility to 10, it justifies the capital to have your own mill. But until then, we use other people's mills because they have spare capacity and quite competitive pricing.
And it could be an advantage to be in a very common district for gold mining. So there are many mills, and
there are. There are 7 mills around us, and we've actually ran and operated a number of them ourselves in the past. So we know the area, we know the people, we know how to do business. That's why we don't rush off to Africa or Asia, because this is where we have built our careers, and this is where we know how to get things done.
And I like your team. So you're a metallurgist. You have a Grant as the mining engineer. You have a geologist on board.
David.
So David.
And our chairman is a mining engineer who's also the chairman of a $4 billion company. So we're very happy to have him on board as well.
Wonderful. Let's talk about exploration upside potential for the development of the resource.
Yeah, I think we focused on 4 core projects. We had about 20 targets to look at, and we had to prioritise where is our money best spent, and we focused on 4 at the Teal Gold Camp area, at Blister Dam, at Antill, and at Binduli. So we focused on those 4. We believe, there is potential for 1 million ounces to be in each of those. However, we have to let the drilling tell us that. We don't want to be telling the people what we can deliver. The drills are out there. We're halfway through the drilling program. We have got some good results that we've announced to the market already. The news flow over the next 6 months will be very, very heavy in terms of catalysts for pricing. But our target is to explore for resource extension and for new discoveries, brand new discoveries.
Okay, and the drilling program was quite sizable. I remember something like 4 million spent for 55,000 holes.
Exactly right. Okay. 55,000 metres, so 55 kilometres of drilling within a $4 million budget. And for a company that has a market cap today of 40 million, that is a big budget. And yes, we've been able to self-fund it without a capital raising.
So you're clearly heading towards the 100 million magic mark.
Yep, the magic million is gives us A, relevance in the market, but B, critical mass.
Okay, wonderful. You also have a vanadium deposit in your portfolio. Could you talk about this? What is the value?
Yep, it's very exciting. The vanadium project is in joint venture with our JV partner AXF Vanadium. They have the ability to earn up to 75%.
It's a Chinese company.
Chinese-backed company. They're spending $6 million on the project, so no cost and no distraction. And one of the things we don't know about is vanadium. So we bring the experts in who are vanadium experts. So yes, they have the ability to spend $6 million and earn 75%, but the project is world class. It's 2.6 billion tonne of in-ground vanadium.
Can you put this into perspective with other sizable vanadium deposits?
It's the second largest deposit in the world.
Wow, okay.
So it's quite sizable. It's relatively low grade at about 0.5% in ground, but we have the ability, because it's not a hard rock vanadium deposit, it's a very shallow oxide deposit. It's not in a magnetite, and it doesn't have titanium, so it's very easily mined. It's very easily upgraded to between 1.8 to 2% vanadium, which is a world leading grade, and then downstream processing. A number of different pathways are being tested in China now, and drilling will commence again in March. So the plan forward is for our joint venture partner to drill Lilyvale, which is our core project. It'll be the first 50 years of production. Pre-concentrate to 1.8 to 2%. Define the optimal downstream metallurgical pathway, which we believe will be salt roasting. But the work has to continue. And then work through to final feasibility. Have discussions with offtake partners, and particularly in around prepayment to assist with capital, and then move the project into production in what I would believe is a 2 to 3 year realistic time frame.
I have the impression right now that the vanadium deposit isn't really priced in Intermin Resource share price.
It certainly isn't.
And maybe there's not so much talk about it, but vanadium is really, as a battery metal, as a component of steel manufacturing, it's really could be a potential key metal for future development. And
absolutely,
it's such a sizable deposit in the hands of a gold junior, or going to be maybe a mid-tier company, is really interesting. And you have a clear strategy for this, for developing, because you have a joint venture partner already in place.
Correct. So some could say, why didn't you keep it 100%? But we would say that we aren't vanadium people, we're gold people. Do we want 100% of something that's going nowhere, or do we want 25% of something that could be in production in 3 years, generating up to $100 million a year? You don't know. We have the work to do. We believe it's the best thing because we're not distracted by it. We're focused on building our gold business, but shareholders have considerable leverage to the upside in an energy metal that is being, the technology is being developed in the redox battery space, and a lot more vanadium is being used in steel because of its tensile strength.
So thank you very much for the interview. Anything from your side you would like to add that we forgot maybe?
No, I think we've pretty much
wonderful.
Covered.
Thank you.
Script is not. Thanks very much. Thanks, Florian.
Good.